What's up, guys? This is the Nerd Ninja here, coming at you live with a new crypto video. Please subscribe, like, and comment on this video to join the Ninja Nation. Alright guys, so RSR reserve rights. Reserve your rights, guys. Gotta reserve your rights. So if you've been following my channel, you know that I've been reviewing this coin called the RSR token. And if you followed my advice and purchased the RSR token, you would be like, I don't know, 2 to 3x your money right now. Anyway, in this video, I'm going to be going over how in which it works. Because there's a lot of people that are confused about like what is RSR, what is RSV, how does it all work. So in this video, I'm going to break it down to you in a way that is relatively simple. So yeah, let's go ahead and get into it. So basically, RSR reserve rights is a stablecoin protocol that is a 2-token protocol. RSR is the token, is the investment vehicle in which we purchase RSR. We purchase and it appreciates according to the market price. And RSV is the stable coin that is utilized by, well, RSV users. So you buy this coin to hold the value that whatever value that you have. So like it would be, it's equivocal to USDT. So yeah, so it holds value. So what makes RSV different? Well, RSV is backed by multiple stable coins along with other stable assets within a smart contract. So right now it's backed by just, you know, USDC, Paxos, and TUSD. Later on, BUSD and DAI will be added into the vault to back RSV. So think of the protocol as an index fund, right? So an index fund is a diversified portfolio of stocks that is designed to protect investors from market volatility. So index funds are composed of, like, I don't know, Fortune 500 companies, a bunch of Fortune 500 companies, and they are composed of a bunch of them, and you buy one share of it. Buying one share of this index fund would give you like little fractions of these stocks, the stocks of these companies. So so if one company fails, you still got this company right here doing relatively well, and it protects you from market volatility. So RSV is backed by a decentralized index fund of stable assets, ranging from stable coins to other tokenized assets. Like tokenized bonds, property, and commodities. So eventually RSV will be backed by not only stable coins, but it will also be backed by tokenized bonds, properties, and commodities. So this is essentially, they're trying to break away. Eventually, they're going to break away from the US dollar, because the US dollar will eventually corrode. I mean, it already is. That's why Bitcoin is mooning right now. Inflation rates are going to be high as hell in the next coming years. And so the US dollar is probably going to lose its reserve status as the reserve currency. And so RSV will be decoupling from that monstrosity in the making, and then by backing itself with not only fiat stablecoins but tokenized bonds, properties, and commodities. So it will be a stable asset that will detach organically from the dollar, unlike Ampleforth or any other algorithmic stable coin that utilizes algorithms to decouple, to artificially decouple from the dollar. RSV will be organically decoupling from the dollar over time. Think about algorithmic stablecoins, and the CEO of Reserve actually stated this. Problems with algorithmic stablecoins is that if there is an error in that algorithmic stablecoin, if there's an error within the algorithm, right, then you run the risk of people losing everything. So this is a more organic way to detach from the U.S. dollar and to remain stable. So think of RSR, right, the token that we purchase, as a share of that index fund. As assets within the vault or protocol appreciate, the fees collected from RSV is collected, and RSR holders can cash in on this value through a process called arbitrage. So as index funds appreciate, right, the stocks that are inside the index fund appreciates, well, the share of that index fund appreciates. So RSR is like a share of the index fund that RSV is backed by. So now the protocol was divided into two sections. One section is called, I labeled as the protocol stabilization. So the protocol is divided into two sections, right? So there's the protocol stabilization section, which is a automatic process. And then there's arbitrage, which is what we initiate every time. So through arbitrage, you can cash in on the value that the vault appreciates. Then that could be from the assets themselves appreciating, or from the fees collected on the network from RSV transactions, both of which help maintain the stability of RSV. So both of them help stabilize RSV. So this diagram explains it a little bit better. So when the price of RSV goes above $1, the protocol sells newly minted or access vault RSV for either tokenized assets or RSR, driving the price of RSV on exchanges down to $1. But when the price of RSV falls below $1 on exchanges, when the price of RSV falls below $1 on exchanges, the protocol purchases RSV for tokenized assets, bringing the price of RSV on exchanges back up to $1, right? So this is what we have nothing to do with this process right here. This is all automated. However, on this side, we, the traders, us, the holders, RSR holders, we can conduct arbitrage, which happens when, as a result of, when there is appreciation, either in the assets within the vault itself, like tokenized bonds, properties, or even yields from the stable coins that are within the vault, or transaction fees from RSV, right? So every time you conduct RSV transactions, transaction fees collected. The vault will accumulate access RSV, and RSR holders can purchase this with their RSR as a part of stabilizing the price of RSV, which maintains the vault's ratio of assets and reduces the supply of RSR. So every time you initiate an RSR, right? So every time so if you buy RSR, right? So you take your RSR and you exchange it for RSV, right? So when RSV appreciates to like $1, so you exchange your RSR for $1 of RSV, and when RSV appreciates to $1.02, or $1.01, or 3 cents, or 4 cents, you can then sell it back for a profit. But when you exchange your RSR for this access RSV in this vault, that RSR is burned. And so if everyone is constantly doing this, right, the RSR supply will be burned. It's deflationary, right? So yeah. And so when the vault's ratio of tokenized assets goes below the target range, the protocol sells RSR for tokenized assets, thereby replenishing the backing for RSV.